of your transactions, right? For example, before you go out in the morning, you have a policy of what you do. First, you brush your teeth, you have your bath, you follow some process, right? Before you leave your house in the morning. Why some people, they can just wake up and get out without even brushing their teeth. That's their own policy. Don't blame them. So banks also have policies too. So if you want to approach banks for facilities, there are some checklist or process that they will follow. So that is what is known as the credit policy. So it is known as the culture of the financial institution, okay, or the process to be followed before lending out fund to customers. That is credit policy. So whatever you know you have to follow before you can give out facilities to customers, that's your credit policy. Some people will say, go and bring this A, B, C, D documents. It is when you tick all those boxes that they can move on to the next stage. That's their policy. So whatever that is known as your philosophy or the concept of lending, your concept of lending or process or procedures that you follow in doing some things, that is your policy. So credit policy is also the same thing as those concepts of philosophy or the process that the financial institutions follows before facilities are granted to the customers. That is what known as what? Credit policy. So what is the objective of credit policy? What are the main objective of credit policy? Is it that they just set up this policy to wicked people or to make things difficult for people? So there are some objective why these things are done. The first one is that to ensure that facility are granted to the right customer. Okay? You don't go and give money to somebody that will run away from you. So when you follow your proper procedures, then you'll be able to grant this thing to the right customers. Okay? So also to ensure that facilities are granted on merits. So when you follow policy, you grant something on merit, not that because somebody no one guy at the top, you give the person's loan, or because somebody is your friend, you grant loan. No, under policy, you have to ensure that you follow the proper process. Then the third one is to ensure that bank funds are invested profitably. So to ensure that the right things is done at the right time, in when granting facility. So these are what I can recall about objective of a policy. So it's just like your SOP. In your companies, you have your SOP, right? So what are the objective of your SOPs? That is basic thing we're discussing here. What is the objective of credit policies, right? So now that we've discussed the objective of credit policy, what are the characteristics or characteristics or key elements? They can attack us from different angles or key features. Who can borrow me English? Key attributes. Who can borrow me more English? Key qualities. They can ask you in any way. Qualities of a credit policy. So what are the characteristics, elements, key attribute, features, policy, or quality of a credit policy? So the number one, so when you are drafting SOP or a policy, the first thing is that your SOP must be written. It must be written in a simple English, devoid of any ambiguity. I should not go and be looking for dictionary because I want to understand your policy. That's the meaning of this. Okay, it must be written in a plain English so that it must not be ambiguous. That's just a summary of the grammar. It must not be ambiguous. Then the second one is that it must not be too rigid. That is, it must be adaptable to changes and amendment. So your policy should not be too hard that every day. For example, banks say that, oh, when it is 4 o'clock, don't attend to anybody again. They will shut down their door. But I lie. All fingers are equal, but some fingers are more equal than others. So some people can still come into the bank 5 p.m. and they will withdraw money. So what I'm saying is that your policy must be a little bit flexible. It shouldn't be too rigid, right? There should always be some form of flexibilities in your policy. So amendment, that is, it must be flexible. That's what I mean by this. It shouldn't be too rigid. Okay. Then your policy. Okay, let me remove this flexible and include as third point by saying is that it should not be too restrictive. It should not be too restrictive. That is, it should give room for flexibility, something like that. That is the meaning. Meaning, like second point means that your policy must be adaptable to change. Here, we are saying that your policy should give room for some form of what? Flexibilities, right? So let me just leave it like this. So these are the some of, okay, it must be written in line with the extant law and in the best interest of the bank, right? Then it must not, okay, that's not, I've already said that already. It must be written in line with the extant law. So that is just that is basic things. So now, what are those examples of policy? What are the content of what you have? Like, for example, if you want to approach a bank for facilities now, what are the likely documents that they will request that you should bring? That is, what are the content of credit policy? Like, you approach a bank that you want to borrow money. What are the content? First one is that there will be a KYC or no KYC form. This should be number 2. There should be form of loan application form, right? There will be an application form which you have to give. Then there will also be an agreement that you have to sign. Okay, there will be a KYC form. They will ask you to bring audited financial statement for some years. They will also request for your credit rating reports from credit bureau. This one, they may not tell you, but it is something they do internally. Okay, when banks ask you to fill KYC, bring your audited accounts, there are some things that bank will do that you will not know. Okay, all this KYC. Here, they also request for your means of identification. So these are what the credit policy will state that they must get from about the customers. Okay, now in granting loans to a customer, there are 4 C's. So we have 4 C's when in granting, 4 C's to consider when granting loan to customers. So what are those 4 C's? Before you give money to anybody, you consider some 4 things. C's. The first one is what is it? I mean, not 4, there are 5 of them, sorry. There are 5. The first one is what is the character of the person you want to borrow? Character of the customer. You consider what is the character of the customers. All right. After you've considered the consumer, what is the condition of the borrowers? That's the second C. What is the current conditions and what is the capacity? Okay, capacity of the borrower. Someone that is doing like 10 million naira, we now want to give the person a loan of 50 million naira. That means capacity no go fit carry am. Then what collateral is available? Collateral of the presented, collateral presented by the borrower. What is the collateral that the borrower presented? And what the last one is, what is the capital base of the borrower? So when giving out money to anybody, these are those 5 conditions that you must follow. So banks do all these things without your knowledge. They do a lot of assessment. before they give out money. So let me stop here for now on credit policy. Please, is there anyone that have question? I want to move on to decision making problems. Any questions on credit policy before we move on to decision making problem? I'm listening. Any questions on credit policy before I move on to decision making problem? Okay. All right. So if there are nothing, so let's discuss decision. What is the decision making? What is the definition? And what are the type of decision? And what is the process of decision, process or stages or steps in decision making? So these are the three things that I want to discuss under decision making. The first one is what is the definition of decision making? The second one is the types of decision. The last one is the process or steps when making decision. Hello, house. Are you following me? I've been talking. No one is talking. Everyone is quiet. Are you guys with me? Don't worry, Dada. Is it entering well? Who want to confirm? Is it entering well?
Yes, it's entering.
Go ahead, Ben, hey, Ben, don't mute. Ben, remain unmuted, please. I want to give you one small work to do. So can you run us through credit policy that I've just discussed in 2-3 minutes? Everything I've discussed about credit policy, run us through it. Sorry that I set you up.
Okay,
it's fine. Just run us through it.
No, it's fine. Okay, you said credit policy is known as loan policy. So more like the process we take before giving out loan to somebody. So you also spoke about the objective of credit policy. You said is to ensure the facilities are granted to the right customer, granted on merits, bank funds are invested profitably, that they will get return on the fund that they are granting. Then you talked about the characteristics of credit policy. It must be simple and void of ambiguity. You said it should not be rigid. You spoke about banks that bank close by 4, but sometimes when people come, they do allow them to withdraw after 4. You spoke about it must be written in line with extant law. Tell me if I'm so correct. Then you talked about content of credit policy. You said loan application form, agreement, KYC form, credit bureau, a credit rating report from credit bureau. Though you said this, that the bank does it without the knowledge of the borrower. Then you also spoke about the 5 C's when granting loan to customer: collateral, capital base, capacity, condition, and character.
All right, thank you very much. You answered it. You just do a quick recap for us successfully. Another person should get ready for this next topic. So I'm taking the next topic is decision making in the financial institution. So what is a decision making? What is decision? Okay, what is decision? So decision making is a process of selecting the best outcome from series of alternative. E.g., you are hungry. No, you went to a buffet restaurant, right? You know, when you go to a buffet restaurant, there will be about A, B, C, D, E, F, or G of food, different varieties of food. So sometimes when you get to buffet, you'll be confused that which one should I even eat first? So that's a decision-making dilemma. So you need to now check, okay, let me take this and this. So you have a lot of alternative. If you decide to go for A and B, that's your decision. So the process of selecting selecting the best outcome from a lot of series of alternatives, that is known as what? Decision. So the quality of your decision depends on the level of your what? Experience. Okay. So the quality of decision is a factor of the level of experience or the experience level of the decision maker. So if you are highly experienced and you come across something, the rate at which you are going to make a successful decision will be very, very high than if you lack the necessary experience. All right. So decision making, if there are no alternatives, there is no decision to be taken. If there are no alternatives, no decision. You only take decision because there are a series of what? Alternatives, out of which you want to choose the best from possible alternatives. So we take decision because there are alternatives. So if there are no alternatives, we don't take decision. You only go with what you see. That's it. E.g., you have 3 cars at home, for example, now. You want to go to work now. You are now considering which car should I take out of. Should I take A, B, or C car? That is alternative, right? So you say, okay, let me go with B because this one consumes less fuel. That's your decision. But let's not assume that you have only 1 car. Which decision are you taking? You have to use that only one. No, you don't have option now. You have to drive your car. So that is so you make decision because there are alternatives. That is what trigger decision making. All right. So there are a series of types of decision. The first one is investment decision. In banking, these are the decisions we have. We have investment decision. We have financial decision. We have profit decision. Okay, we have dividend, and whether you want to dividend or you want to retain, or retention decision, or retention decision. Either you pay dividend or you retain your money, right? Then we have liquidity decision, and the last one is the CSR, corporate social responsibility decision. So these are the 6 types of what? Decision making process that type of decision you can take. So let's look at them one by one. Investment decision is whether to invest or not to invest. That's a decision. Whether you want to invest, you want to acquire a new branch, e.g. Access banks, their own is that they keep acquiring everything. That's their own investment, whatever. They love acquiring new banks, everything. That's Access banks for you. Okay, that's their own decision. They love acquiring. Financial decision is, okay, how do you finance your operations or whatever? What are the various financial decisions? Should you give out more loans or should you not keep? Should you keep your money or give out more loans? What should you spend on? So various financial decision, finance decision, quite many. Okay, which project should you want to take? The one that has high NPV or high payback period, those are the decisions you take. Then profit decisions too. You also take decision about profit, right? Then dividend, whether to pay dividend or return it. Some people are of the opinion that every money they make in a year, they should declare it as dividend. Why some of the opinion that no, any money that we make, we shouldn't declare as dividend, we should rather reinvest it back into the business. So it's a decision. Liquidity decision. Should you focus more on liquidity or more on profitability? That's a decision to take. Then CSR decision. Should you do CSR or not to do CSR? Remember, every decision have its own advantage and disadvantage. So I don't know how far they will ask us to go in terms of listing those types of decisions. So let's move on to steps or stages in decision-making process. Okay, steps or stages in decision-making process. So I'm going to list out a 7 widely acceptable decision-making process worldwide. Whenever you want to take any decision, there are 7 steps that you follow. So that is what I'm going to list for us now, which is also in line with Dr. Bademe's thoughts, right? So the first one is problem definition. You said you are sick. We don't know which type of sickness you have. How can we resolve your wahala? If you say you are sick, you should go for diagnosis, right? Where they will know, oh, it is malaria, or it is typhoid. The first thing is that you must first identify the problems at hand. That's number one thing. If you don't know the problem, then there is nothing for you to decide. So you must first identify the problem at hand. So identification of the problem. That's the first thing. You must first identify the problems that you have at hand. So if you are unable to identify the problem at hand, then your solution is still far, 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 far from it. So that's number one. Then number two is that you must state what is your objective criteria, objectives. What did you want to achieve? E.g., our problem is that we are recording low profitability. That is our problem. We are reporting what? Low profitability. That is our problem. Now, what is the objective now? The objective is to turn around low profitability and earn profit. That is the objective. Objective is always a simple line. Let me go deeper now. This your problem definitions now must contain why, where, who, what, when, and how. 5 W's and 1 H. Your problem definitions must answer all these questions. Why is it a problem? Where, that is the location, where is the problem happening? Who is in charge of who is responsible? What is the problem itself? When did the problem started, and how do you want to resolve it? So those are the 6 questions that your problem, this step 1 on problem identification must answer. Why, where, who, what, when, and how. Okay, you should be able to. I don't want to go deeper. I can go deeper and analyze that for us, right? So, but let's leave it at that. So your objective is, what do you want to achieve? Objective is that to make profit, to reduce costs. That's the objective. To improve liquidity. Objective is not always like a one answer stuff, right? Then once you have decided your objective, the second one is the alternatives. Identification of alternatives. So what are the alternatives that you have? Or the option. Alternative also the same thing as options. E.g., close down. E.g., acquire more, sell more. Those various alternatives for options that you have. That's your step 3. Then step 4 is, what is your decision criteria? That is, what are those tools that you are going to use in analyzing your alternative? What are the tools that you are going to use in analyzing your alternatives? That's what step 4 is saying, decision criteria. Then step 5 states what? That if you want to learn about this decision making process, I just finished a course now called ABP, Analysis of Business Problem. If you are interested in having in-depth knowledge on how to analyze a business problem, maybe after our MSc, you can reach out to me. I can be sharing some of the cases. We treated almost, in less than 3 months, we treated almost 25 cases, real life cases of companies. So if you are interested in having more knowledge about how to analyze a business problem, after this, our program, reach out to me. I will share some materials for you free of charge. So you can read up those materials, then on your own too, you read those cases and you analyze it on your own. Then I can share solution or possible way. So if you want to learn this, actually, it's a very interesting stuff, right? So decision criteria is this. Then the 5th steps. If under the 5th steps is you now evaluate the alternative. Evaluate, or you call it evaluate or analysis of alternatives using the criteria. Analysis of alternative based on the decision criteria. That's what you do next. So once you have now analyzed all your alternative, or you have evaluated your alternative based on your criteria, then you take decision, right? You now take what? Decisions. So decision, select the best options or alternative. So when you have selected the best options or alternatives, then the last stage is to what? Action plan or implementation. So, ladies and gentlemen, so like this identification of problems must have your who, where, what, whom, why, and how, right? Then these decision criteria too must follow this concept of MISI, which we discussed yesterday. Anyway, don't let me go. So I'm going too deep on decision taking, the steps. So any questions on decision taking, decision making process, please? Any question? Let me stop there for now, so I don't go too deep beyond syllabus for us. Any question on decision making? All right. So
why is Mason, please?
where is what?
Messi, MECE.
Yeah. Okay. Missing means mutually exclusive, collectively. What's I forgot himself? Mutually exclusive, collectively, something. Just a minute.
Exhaustive.
Exhaustive. Thank you, Imam. Yeah. So what this means is that if you select a criteria, you must not duplicate that same criteria. E.g., you cannot have profitability and financial as two different criteria. Is either you have financial, and that your financial must cover everything under financial, right? So that is what it's saying. You cannot say you want to make profit and you want a good financial performance. You are repeating the same thing. That's missing. Missing means once you pick a point, it should contain everything surrounding that. So that's missing. Anyway, for the purpose of this course, forget about it. No lecturer will ask you to define Messi or explain Messi, but it's a very good thing that you know about Messi. Okay, now I need to call somebody to summarize decision making. I use the opportunity to rest. I want to move on to the last topic, which is the banking sector fraud. Then we'll now take past questions before we share the grace and see ourselves on exam day. So who should I call to do this job for us? The last person that spoke was Ben Abi. Let me spare my guy now. Let me spare them. Let me look for one of our madam to speak this time around. Yeah, Sister Itoro, the Holy Spirit directed me to you. Can you unmute now? Just summarize what we've done now under decision making. Hello, are you with us?
Yeah, I can hear you, Kazim.
Oh yeah, just summarize this thing for the decision taking process, decision making in financial institutions. Summarize everything we've just discussed now.
Okay. So, from what you said, basically, decision making is the process of selecting the best outcome from your alternatives, from these different criteria or different things you want to do. You have to make the best. You have to pick the best opinion or the best option from whatever decision you want to make. So you give the types of decision, investments, financial, profits, dividends, and liquidity. So investment decisions basically refers to when you're trying to do a business or you have an investment you want to take on. So you have to check or clarify or analyze the best option for you to make that decision, to make that investment rather. And the financial decisions, you have to, for example, maybe you have somebody that wants to finance your company or your business. You have to look for the best option, the person that is going to give you more money and less risk than the profit, the business, or the investment you want to make, the one that is more profitable for you. You have to make the best decision. Basically, just analyzing your options, then dividends and liquidity. You have to know the one that is going to give you the best. If it's short-term goals or long-term goals you want to make, the one that is going to bring out more money, more liquidity in stock. Then the process and the steps. You have to identify the problem, just like you said. You have to know what lacks in your decision and where, why, who. So basic things, identification of alternatives, decision criteria, then the mutually exclusive, something else, Then evaluate, analyze alternative based on decision criteria. Just like I said, you have to be able to analyze the alternative, the options, the one that is best fit for your business or best fit for your investment. So D and E or E and F is most like the same thing. Select the best option. Then lastly, you have to implement your decision or your plan. So I think that's
Awesome,
basically all you
awesome.
said.
Yeah, you guys are listening very well tonight. Thank God for that. So let's move on to banking fraud. I hope no one has committed a fraud here before. But if I'm to throw a question, I believe everybody, no one will say he or she is innocent. In our life, have you ever stolen something before? Maybe take something that doesn't belong to you? I want to believe that almost everyone is above 30 or thereabouts. Let's say in 30 years of your life, have you ever taken something that doesn't belong to you before? Is there anyone that have a no answer? Maybe knowingly or unknowingly. Probably when you are still young or when, in case your answer is no, kindly signify, but I'm assuming that it is yes. Knowingly or unknowingly, all of us have done something before that we don't know. At least we've taken something that doesn't belong to us, maybe knowingly or unknowingly before. So that's a honest truth. All right. So that aside, let's discuss what is banking sector fraud. What is a banking sector fraud? What is a banking sector fraud? Let's look at the meaning of that first. So, banking sector fraud is when a person or it could be a person, or you can say is a deliberate attempt, right? It's a deliberate attempt made by a person, is either one person or group. Banking sector fraud can either be committed by one person or group of people or group of persons, right? To bypass the due process for their own due process and procedure okay, of the bank for their own financial advantage. That is fraud. So this is what is known as banking fraud. So when people try to bypass the normal process for their own, the main point is that for their own selfish gain, right? For their own financial and selfish gain, right? So the question now is, what if you don't follow process? You did not bypass process, but you did not steal money, but still you did not follow process. Is that one a fraud, really? That's why I'm using the word financial fraud. You bypass a process because of your own financial or selfish gain. That is what is known as a banking sector fraud. So what are the examples of banking sector fraud? Can you list them for me? What are the examples of banking sector fraud? List. First one is outrightly. There are a lot of bankers there and they don't want to talk. Outrightly stealing of bank money. When you deliberately steal money, that's a banking sector fraud. Okay. Sometimes you work as a cashier, you deliberately underpay your customer so that you can steal. But one customer leave your banking on, it is always difficult for them to come and complain that the money you gave them is not complete. Right? Once they exit your banking hall, it's always difficult for them to come back and report shortage. So as you are underpaying somebody, you just pray that God don't check, you just go. Because once they leave, it's always difficult to come back. They can always come back and make noise, but still, you can also tell them that, well, Oga, you should have counted your money before leaving. So because you didn't count it before leaving, I'm not responsible again. So the first one is deliberately stealing money. Even when you manipulation of interest rate is also a fraud. In the course of my careers, I've been able to investigate this before. Interest, excess bank charge before, and I made recovery. Deliberate. It was done by one of the popular bank. I won't mention the name so that the people working there will not attack me. Right? Excess bank charges. We did their computation. We discovered that what it run into millions, right? We were able to recover it from the banks. But what they have taken from us is more than what we should pay. It's known as excess. So whenever they manipulate interest rates, it's also a fraud. Okay, it's also a fraud. Even when they abuse the normal procedure or credit policy before granting loan, it's also a fraud. Do you know what they do? Most of these people, when they grant loan without following credit policy, they will go back and meet the customer to give them some cuts. Yes, it happened in practice. You cannot go to a bank and borrow. I know about Emefiele very well. Emefiele, any DCSR when you collect, you must go back and give out that returns. It's not even in naira, it's in dollar. So people go back and give returns, stuff like that when they borrow money. So because before that money is granted, they try to circumvent some due process so that they can quickly get the money. Because they know that the loan is going out, they go back and collect some form of returns. That is a fraud. Then when you posting transaction into a wrong ledger is also a fraud. They do it deliberately. Have you ever witnessed something on your account that you just go and download your 5 years bank account and you keep seeing some funny negative balance in your account? I don't know whether you have seen it, you have witnessed that before. You go download your bank statements, you keep seeing some funny negative balance. It has happened to my FCMB account before. I just run like history of my bank statement. I was saying negative, and me, I know that my account has never gone into overdraft before. What happened? Not knowing that these people, what they used to do was that someone else gave me an hint that sometimes they try to, like, if you want to process visa now, you want to travel out. So what they do is that when they check your accounts, they can just use your credit balance to play. They will go and fund one account that they will use for visa processing, all those ones. So that once those people now apply for the visa. Hello. So once those people's visas is approved, then they return the money back. So serious, that's also a fraud, right? That's a fraud. Okay. Then hello. So we also have impersonification and forgery is also a fraud in the banks too. Or issuance of fake draft checks, bank draft or something is also a fraud. So we can list bank fraud. There are many of them that you can list.
Misappropriation
Misappropriation of what?
Misappropriation of bank assets.
Bank assets is also a bank fraud, right? So many of them. There are a couple of, they can ask you to list 10 examples of bank fraud in the exam. So what are the reasons for fraud? Why do people do all this fraud? Reason for fraud. Please, in anything you are doing, when they ask you for reason for fraud, your number one reason should be greediness. They want to do like big boy. How do they normally call that thing? You want to roll with the big boy. You don't want to work. That's greediness is one of the reasons why people commit fraud. Then poor management. So if banks have poor management or poor SOP or process, then when they have weak internal control and audit procedures, all these things gives rooms for some people can even justify that they are not paying me well, poor remuneration. Imagine you are paying a teller like 100K and that person is counting millions of naira every day. Won't the person be tempted that why can't I just take part of this million and my life problem will be solved forever? Do you know some people, if they see 2 million, they can kill because of 2 million, even 1 million. So I know someone like Ima and the rest, 1 million is not change for you, Abby. But some people, let them see 1 million naira, they can kill to tell you. So most of those people you see, that's why I used to tell people, when you go to a bank and you see tellers, people smile at you, you to bless them with something because their salary is so poor. Their salary is so poor. So bless them, give them something. Don't think that all the suits they wear, all those things, they are packaging, corporate packaging. Many of them are earning so little. All right. So those kind of people can be tempted to commit fraud, right? They can be tempted. So poor remuneration also can be a justification, but it's not, there is no justification for fraud, though. Don't get me wrong, though. But it can be a reason why people are committing fraud. Anyway, any question on bank fraud now? This is very interesting, right? So who should I call to do a quick revision for us on banking sector fraud? That is the last topic I'm taking. Next now is for us to look at like a past questions and we call it a day. So, okay, Ima, you want to
Kazim,
speak?
yes, good evening. So I just wanted to add something under reasons for fraud. So this might, I don't know, it may be going a bit overboard, but then I feel like it's also a bit important. So when you're talking about fraud, for instance, now in audit, there is something we call fraud risk in audit. And when we look at it, we always consider what is called fraud triangle. So that fraud triangle, we use it to look at reasons for fraud. So everything that you've mentioned here is under one of those reasons. So there are three reasons. One, incentive. Two, opportunity. Three, rationalization. For instance, when you explained that a cashier collecting 100K and the person is trying to now is counting millions every day, that one falls under rationalization. Rationalization is just the idea of, okay, this reason might make sense to the person.
If I
to
still,
actually try and
people
steal
cannot
that
blame
money.
me too much, Abi. If I steal money,
Exactly,
people
that's
cannot, they
rationalization.
will even pity me, sef.
Exactly. So the second one is incentive. Incentive is also known as pressure or motivation. So what motivated the person? What was the ginger? Does the person have a
You have
family background?
family pressure.
Exactly.
You want to give birth to how many children and you are earning 100K.
Exactly. Greed falls under incentive. Greed falls
I want
under
to be like
incentive.
big boy. I want to be a
Exactly. So
big
then
boy, right?
yes. Then the last one is opportunity. So opportunity is now the problem within the organization. That's the one that, on terms of internal control, what were the lapses in the organization that led to the person being able to do that? So poor management, poor SOP, weakness of internal control, and all this procedure falls under the bucket of opportunity. So I'm just, maybe in your explanation, you put something on fraud triangle, you even draw a triangle and you put it. It could just, be an additional mark for going extra. So I just wanted to add that.
Thank you so much, brother. That's well detailed. So, should I call somebody to do this or Ima? Hello, someone's trying to say something now.
I say Imatu Sabi. You don't do AML very well.
For us, one person should just do a summary of this. Let me call Oyinda Raymond. Raymond, yeah. Oyinda Raymond. Unmute and quickly run us through banking sector fraud. Explain what we've just discussed now, Oyinda, in your own way. Oh, Oyinda, are you there? I think she's not there. Okay, the person next to her, I think I called Abisola. Did I call Abisola yesterday? I think I called Abisola yesterday. Let me move on to Mrs. Popola Oluremi. Just summarize this banking sector fraud for us and move on to past question. Mrs. Popola Oluremi.
Good evening.
Sola
Good
Diran.
evening.
Oh, yeah.
Good evening. Okay, based on what you said, banking sector
Why is
fraud
everybody
is a
saying based on what
deliberate.
I said? Why is everyone
Okay,
saying based on
apologies
what I
for that.
said tonight? Based on your
Apologies for
understanding,
that.
no?
Okay, based on what you've been taught tonight, I think that's better.
Hey,
That's better.
I just hope when you are about to write your exam, you not start with based on what you said.
Oh no, I won't do that. Nobody
Okay.
tries that. Nobody
Oh,
tries
yeah,
that.
continue.
Okay. Banking sector fraud has to do with a deliberate attempt by a person or a group of person to bypass the due process for a personal gain or for a selfish advantage. Then we have reasons for banking fraud. And one of the reason it's outright, no example, I mean, example of banking fraud is outright stealing. And when you deliberately take what you know it's not yours. That's one. And another one is manipulation of interest rate. When they tell you there's a particular percentage that you are meant to pay because of probably the money they lend you, and they go ahead to take something higher. That's one. Then another one is the abuse of normal procedure, when you try to bypass or to boycott some procedures for your personal gain. That's another example of banking fraud. Then posting transaction, either knowingly or unknowingly, to a wrong ledger. That's another example. Then impersonification or forgery, when you try to forge somebody's signature to get money out of another person's account. That's another example. Then we have issuance of fake bank drafts. Then misappropriation of bank assets. Then reason why do people engage in fraud? Then the first one is greed, when you want to live above your means. What you have is not, you are not content with what you have. You feel, "Okay, why can't I live like this person?" And you try to um you're enticed by something that you don't have, and you go extra mile to get what you want, to get what you think you should have. Then another example is poor management. But because for me, I believe it will be very difficult to commit fraud. If not, it won't be easy to commit fraud, or even difficult if the internal control is very strong. When you know there are processes and procedures you need to go through before you scale through a forgery act, then that one on itself would actually discourage you. But if you realize that, if I could just do this and do this easily, I will be able to sweep out money from the account, then that could as well be a motivation why one should commit fraud, even if you want to live above your means. And you know that there are procedures that are tight, that you cannot easily boycott. Then you definitely have a second thought, except this collusion, where you collide with some people, or you and some people actually colluded. I don't know if that English is right. Yes, and to actually commit a particular fraud. So that's one. Then poor SOP procedures. So when your procedures are weak, then you can take advantage, so to say, of that procedures. Then poor remuneration. If you think what you are earning is not too good enough for you, and you think you could help yourself by taking what does not belong to you. So these are the reasons why people commit fraud, in a nutshell.
All right. Thank you. Thank you. Thank you. Thank you. So I think we have practically touched all topics now under FIN 815. Let me run us through them again. Dr. Bagdemi, decision making, done. Camel, done. Strategy, that's what we did under corporate planning and corporate strategy. Please watch out for this. Corporate planning, we did that on Monday, done. Banking sector fraud and bank distress, done. Credit policy, done. Risk management, done. Your gap analysis, financial distress, Wisdom, done. So we've done almost everything here. So even if you did not attend organizational culture, I've done this one also. So even if you did not attend lectures in class and you are part of us, you are home and dry. This one's to done. Role as director, done. Supervisor.
Risk management.
Risk management, we've done it. That is where we have gap analysis, gap duration analysis, and the right. So the material is here actually. You've forgotten. Sorry. So we've done everything 100%. So no more new topics to treat. So let's just glance through one past questions and we'll sign off finally on 815. So we'll see you on exam day. Yes, sir.
I want to quickly add something.
Please go ahead.
So when we are talking about fraud and the reason for fraud, I actually expected something. So for the purpose of
Tell me.
Not for the purpose of this exam, but just for learning purpose. There is what we call fraud triangle. I don't know whether any of us has come across this
Yes,
before.
yes. Ima thought about that now, sir.
Oh, okay. Motivational
Rationale, opportunity, motivation. Yeah, Ima discussed that with us. We spent, I think maybe you are doing something else. Ima spent a couple of time to
I was not.
explain
I've never
fraud triangle.
participated in the class anyway.
Yeah, Ima, list those three fraud triangle again for us. Fraud triangle, let me write them.
Okay. Pressure.
Opportunity.
Pressure is also incentive. You can call pressure incentive, or you can also call it motivation.
Pressure.
Anyone you like. Then the second, so the
Pressure
first one is
or
pressure.
incentive.
Pressure or incentive or motivation. Second
Yeah,
one
right.
is opportunity. And the third one is rationalization.
Exactly. Okay, thank you.
Yeah, thank you. So based on this, you can explain further. All right, thank you so much, everyone. So we've covered the topics 100% in Fin 815. Let's just take one past question. Let's relax, calm our mind now. Just relax, sit back, enjoy. Okay, let's take a question and we'll just take one past question. You know, we treated this one, 19 and 20, we treated it last time. Remember the structure of the exam. There are 3 sections. There are how many sections do we have? I think sorry, I've forgotten. Let me open the past question again. This is very important for us to know so that we will know how to time ourselves in the exam. So for the last time on 815, let's see how the past questions looks like. So for 815, there are section A and section C. There are 3 sections A, B, C, out of which you will be required to, or we will be, including me, I'm also writing an exam, out of which we will be required to attempt 4, 1 per each section. That means in one of the sections, we're going to answer 2. Okay, so you have 2 questions for each section, making 6 questions. So we will be required to attempt 4 questions under 2 hours. Meaning you have to allocate 30 minutes per question. Please don't spend more than 30 minutes on a question, or it's dangerous. Maximum per question is 30 minutes. So keep it short like that. Okay. And normal thing is that you start from the most simplest questions. If you see a simple question, start with that. Don't go and start from a tough one. Start from the most simplest questions. So that's is a given also. I'm sure we all know that very well. So 4 questions, right? Takes 30 minutes per question. Okay, start from the most simplest question. That's the 3 principle I will tell you. 4 questions, 30 minutes per question. Start from the most simplest question and make sure you touch each of the questions. Don't go and ask 2 questions in question A and two questions in section B and you submit. So no, you must first of all pick 1 each from all the 3 sections. When you pick 1, then you will now look for which of the section that you can add the remaining 1 to make it 4. Please, you must first pick 1 question from each of the section. Then you will now add 1 to it again from any other section to make it 4. So last time we treated the 2019 and 2020 question. We treated that the last time. So today, I want to take another one. That was the one Prof. Alabi taught us. So many people are not online that day when Prof. Alabi taught us the question. So let me just go through that again based on Professor Alabi's solution. So solution credit is to Prof. Alabi, not me. It is a solution. All right, let's discuss this. To what extent is the environment for managing financial institution? To what extent is the environment for managing financial institution, especially banks in Nigeria, a product of institutional, regulatory, legal, political, and economic factors? So this was treated the last time. We treated this on Monday. So you are going to list out each of these things one by one. The first one is the institutional factors. To what extent does this affect the financial institution in Nigeria? So institutional factor, under that you discuss CBN and other key institutions like NDIC, how they regulate or how they are whatever affect banking sectors in Nigeria. So that is what we're supposed to discuss. Then you can see you have to talk about institutional, regulatory, legal, political, and socio-economic factor one by one. So that's institutional. The next one is regulatory. You can see regulatory. We have the banking and corporate governance. Then legal and political too. We have the CAMA legal framework under CAMA, NFIU, SCUM L. That's special control, something money, anti-money laundering. All of them fall under legal framework. Then political environment, e.g., political instabilities too have impact on is an environmental factors that banks should consider. Political instability. So that's also an environmental factor that banks should consider. Then apart from that too, we have corruption, which also part of our corruption is also, I think corruption should come under socio-economic factor, not on political, right? So we can move corruption down to socio-economic factors. So this is just what you will write for under the solution number 1. Then look at number 2A. Bank failure is a necessary evil, but it is equally painful one. So here, indirectly, you need to write about bank failure. What are even the good things about bank failure? Advantage. That's just something you have to write about. That is the meaning of a necessary evil. Then painful ones means what are those impacts? Negative impact of bank failure. The first one is what are the positive impacts of bank failure? That's the necessary evil. Then the painful one is what are the negative impacts of bank failure? So those are the 2 things. Now let's look at what are the good things about bank failure. Market discipline. So whenever there is a bank failure, now people seem to tighten up their belts. Everybody sit tight. It brings some form of discipline and measures. Everybody sit tight. They don't want to be the next victim. Then it also encourages innovation. It's when something has happened that people will start thinking of what can we do better? How can we innovate? Reallocation of resources too. It's also brought about this. So it is when there is failures that all these things happen. Then that is when everybody will know that we have a body called NDIC. It's when problem has happened. If there is no problem, you won't know whether NDIC exists or not. So those are the necessary evil of bank failure. Something, maybe some form of takeaway from it, right? Then what are the painful one? That is, what are the negative effects of bank failure? Economic disruptions. When there is a bank failure, it brings some form of panic mode into the economics. There will be loss of confidence in the banking sectors, and there will be impact. It will have a lot of impact on depositors and creditors too. There will be job loss, obviously, like Heritage Banks now. Most of their staff, I don't know where they are now. Cost of taxpayers, there's some form of moral hazard, right? It will drop. Nobody will trust anybody again. So that's 2A. Now, number 2B, outline the failure resolution measure adopted by monetary authority to tackle. No, I think this is outline the various, it should be various resolutions. It can't be failure resolution. It should be outline the various, I think there's an error here. The various resolution measures adopted by Nigerian monetary authorities to tackle financial distress. So what are those steps that governments put in place to address financial distress? We discussed them yesterday, right? First one is prudency, whatever, and early intervention, application of sanctions. Any banks that messed up, by the time you punish them, then other banks will sit tight, right? Then we also have recapitalization and merger. This is also very key. Any bank that is facing issues should go and look for help. Deposit insurance, NDIC, e.g., if your money go with FCING, you get 500K. Resolution framework by the distressed bank. So these are some of the measures put in place. Many of them, please read, they're about 10 here, but I don't think in any case they will ask us to mention more than 5. I don't think so. Okay, so number C, discuss 3 restructuring strategies bank management can adopt to deal with financial distress. Please, this particular question, you know, they told us as part of our AOC that we should read financial distress. So you can see all these questions are on financial interest. So kindly, if you are thinking like me, kindly read this particular number 2 very well. 2A is financial distress, 2B is financial distress, 2C is financial distress. So if they are going to repeat question, it is something like this, they will repeat. Correct, on financial distress. So please read it very well and master it. Now, 2C, discuss 3 restructuring strategy banks management can adopt to deal with financial distress. First one is a rebalancing their assets and liability. They sell non-performing assets and whatever. Then the second one is a cost management and operational restructuring, e.g. cost cutting. They lay off staffs, process optimization, whatever they can do via online, they don't do it with paper again. Then strategic business model and reorientation focus on. So there are a couple of things there. So that's number 2. Number 3, what are peculiar features of financial service that predispose it to risk? And discuss 3 methods of risk management by financial institution. So first of all is that, what are the peculiar features of financial service that expose them to risk? That's number 1A. What are those things that makes them to be exposed to risk, financial service? And number 2 thing is that, what are the methods that they use in managing risk? So for the peculiar features is that, number 1, high leverage and interconnectedness. Banks give out loan to people, some which they don't know much about them. They only depends on the information they submitted. So that's the risk for banks. Bad loans can ruin a bank, e.g. intercontinental banks of those days. Erastus Akikbola, I'm sure we know what happened, how he mismanaged the bank by granting loans to his friends and cronies who messed up everything. So I hope you know, remember that. Liquidity mismatch is also an issue when you use short-term whatever to go and invest on long-term something. That's an issue. Market volatility so banking, they operate in the market that is highly volatile. Okay, interest rate, all those things. It's not all these things that they can pass to the final consumer. It's always very risky. So these are the things that makes banking industry to be highly volatile. Now, what are those ways that banks can manage their risk? The first one is diversification. That is, they do a lot of diversification by investing more on non-banking related stuffs, e.g. real estate, technology, hedging, use of derivatives and the rest to manage their risk, and capital adequacy and stress testing. So these are the way they can manage that. So 3B, what are the things usually considered in pricing of financial service? So what are those things that you consider before you price your financial service? So there are a couple of things. The factors affecting pricing of financial service and financial instruments. So number 1 is the cost structure. What is the overhead like? Market demand. You also benchmark with what other banks are doing. E.g., if every bank is granting facility at 30%, you need to also work within that range or lower it so that you can attract more customers. So even some people still value something like customer service. Customer service, they value it a lot, right? For example, I don't like GTB customer service for anything, because anytime I visit GTB, there will be long queue. So I don't like that. It's not everybody that loves queue. So that alone can be a negative remarks for GTB, that every time when you go there, your customer cares. So those can be some form of remarks on how, some form of remarks too that you can consider in doing all these things, right? So customer segmentation and etc. So all these things have a lot of impact on them. Then let's move on to next question. Question 3, how is the risk element of capital instrument measured? How do you measure risk? So I'm not sure. This is quite technical. I don't think we were taught this. For example, if it is a systematic risk, those are the risks that you cannot diversify. So you measure systematic risk through beta. And if it is unsystematic risk, whatever you can diversify, doesn't use your portfolio, right? Then we have value at risk. Value at risk means your potential exposure. E.g., I gave you a loan of 100 million. You default. What is my value of risk? My value of risk is the 100 million I gave you. Very simple. Then earnings, volatility, and dividends. So all these things are the ways that you can use. But we're not taught this, so I don't think you should focus more on this since we are not taught. Okay. Number 4A. discuss the different categorization of banking sector reforms and explain one major type of reform that have been embarked on in Nigeria between 2000 and 2015. At least if you don't know anything at all, just write Sanusi recapitalization, where he increased all bank capital base to 25 billion. That's Sanusi. So at least everybody should know that. There are a lot of reforms. We have the structural reform, regulatory reform, monetary and fiscal reform. But if you are to discuss anyone, just discuss that Sanusi, whereby he requests banks to.
That is Soludo.
Hello?
That is Soludo.
Who increased something to 25 billion? Is Soludo or Sanusi?
Soludo.
Charles Soludo,
Oh,
2004.
Thanks for correcting me. So that is one I will write about. Soludo reform, whereby banks increase their. Emefiele does not even have any good reform except the repainting of Naira, which turned out to be worse. Okay.
Cashless policy. Cashless policy.
Is that Emefiele? Is Emefiele cashless or Sanusi?
Is Emefiele.
So I believe that if they requested for banking reform, I think the easiest one anybody can mention was that of Emefiele, where Naira was redesigned. So everybody can be able to write about that. I'm sure it's not true. We still have the knowledge. What happened when Naira was redesigned, all those things. We still have the experience. Okay. 4B. What steps are usually taken by competent management in arriving at the best decision? So this year, whatever 7 steps I listed under the decision criteria, that is what you have to list here. Those 7 steps involved in decision making. Then look at 4C. Briefly discuss the concept of corporate planning and strategy. We have done this one also. We did that on Monday. We explained corporate planning and corporate strategy. Then 5, what is in your view basic duty and responsibility of the board of directors? We did this one too on Monday, right? Was it on Monday? We treated board of directors. So you can see everything we treated are coming. In fact, they are part of the syllabus at least. Then analyze at least 8 issues that may arise in the performance of the function of the board of directors. Number 1 is conflict of interest is an issue. Lack of independence, poor corporate governance. What are the issues that arises on day-to-day basis? Corporate issues. So those are what you should list here. Then number 6, discuss the concept of corporate governance. So corporate governance refers to the framework of ensuring that things are done in line with the best practice. So it defines the roles of the board of directors, management, shareholders, and stakeholders. So there are 5 principles of corporate governance. Accountability is there. That is, the board are responsible for shareholders. They must be accountable, okay, for every decision they take. Transparency means that things must be done in a transparent manner. Fairness, equal treatment, responsibility, and risk management. Then we have the key components of corporate governance. Board of directors, these are the people that provide the overall insight and strategies. Then shareholders' rights. At every point in time, the shareholders' right must be protected. Regulatory compliance, the company must always comply with laws and regulations. And internal and external audit mean they must ensure financial integrity and fraud prevention. So these are all what we have. Then we have the importance of corporate governance and likes. So analyze the transaction cost approach and agency theories according to corporate governance. So these ones too were not taught. So I don't think they are going to focus more on those things that were not taught. Okay, so I think that's just all. That's just it. So I will share this material. We can all go through it again and read. All right, and read. And let me stop recording now so that signifies that we are done. So, ladies and gentlemen, this is all we can take, or what we can do on FINIT 15. I hope we've been able to contribute to everyone's knowledge in one or two ways. So please